Am I streaming? Am I streaming? Which one is live? I know I must be live somewhere by now. I've got 3 different streams on the go. Which one is it? Somebody is here. Which one am I in? Is this the one that I set up that everybody was in, or is this a new one? Can you hear me? And am I in the stream that everyone was waiting in? Looks like it. There's lots of yous. I think it must be. There's H. She was in the other one. It must be this one. This must be the one, right? We're here. GME, AMC. Are you guys here for GME and AMC? Is this the GME and AMC room? Not the original stream. This is a new one. Wow, thanks so much for coming over then. That's really appreciated. I have no idea which one it is. This one. I see. So if I go here, 48, 29 likes. This is a new one. Ah, I'm not on the screen. I'm a wee bit off the screen. Hi, thanks very much for joining me. Sorry about that bit of hassle getting here. Appreciate very much that you would join me. Thank you. Sorry for the inconvenience. Sheesh. Right, as we wait for everybody else to come and join us. Is this the GME room? I heard GME might be good luck to buy. Yes, that's what I think. This is what we're here to talk about here. I'm here for the bananas. Bananas. We got loads of bananas. Extra chocolate on your biscuit, please. No problem. Right, okay, this is the right room. I don't know what was going on in those other streams because this is clearly the place to be. 49 concurrent viewers, 42 likes. Wow. Awesome. Right, so people are arriving. Maybe if that other room's still open, somebody would come and share the link to this one with those ones, with those guys, because they don't know. And in the meantime, before we start, as we're getting ready, as is tradition, we'll play a song. This one suggested by first post on the Tradespotting subreddit r/Tradespotting. Love from Colorado. Nice one. That is far away. What the F is that? What are we talking about? Babka room. Tell everyone in the Babka room we're over here. Hey, Korean friend. Awesome, we got the Korean friends here as well. Amazing. Awesome, there you are, mate. How's it going? Good to see you. Hello. Hello from Scotland. Did you guys Google what a crumpet is? You'll have nightmares. Right, so we're nearly ready. You sitting comfortably, because this is the last few minutes. This is it. Get ready. Get ready. Here we go, folks. Am I here? Is this still on? This better still be on, by the way. Is this still on? Tell me I'm still here. Am I still here? Yeah, says H. Yeah, to me? Oh my god, I'm so annoyed. Everything's breaking. Everything's breaking. Yes. Yes, it's in. Damn, I meant the nerdy glasses emoji. Yes, we hear you. Oh, excellent. I am still on. Jeez, that was annoying for a second. Okay. And that's essentially everything we're going to cover for today. So if you know, really, like, that's it. Like, if you have covered everything, really. So that's it. So now I'm free to sit back, and if anybody have got any questions, just go ahead and ask me. If there's anything you didn't understand about all that, just go ahead. If you don't believe those amazing targets, just ask me why, and I'll answer all your questions. As long as they're based on things I actually said, then I'll answer any question you might have. Okay? Ready? Everybody happy? Everybody ready? Everybody ready to ask the questions? If you missed anything, that's on you. And we're back in the charts. Boom, 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 boom. And what do we mean when we say boom? Well, as you go down through the timeline, starting a 1 minute time frame here, you can see Rocky's DMI flashed. There was a period of volatility oncoming that would be out with the standard range that we'd seen throughout that period of time. That relative change was represented ahead of time with an amazing indicator which is worth shitloads of money, which, Rocky, you have to stop giving away for free. You have to. You should link it to people in the Discord. That's where they should be going for this, because the Discord is fantastic and everybody in it deserves to be rewarded. Oh, look, I got donations. How are babies made and why do humans feel pain? No problem, get to that in a moment. Muted buds, I'm starting to think this is the super troll for super chats. Well, it is the week of trolling. It is the week of trolling. I trolled about you. Jamie, can you please tell us when do you think molest will roughly happen? There's a question I've never had before from JD. Welcome to the chat, JD. As in weeks, months, or years, just so we can mentally prepare. Thanks. You're welcome. You're so welcome, JD. No problem. 100% welcome. You don't actually need to even say thanks. Because I haven't done anything. Oh, we like Rocky's flash. So we do. What did Rocky's flash tell us? Well, it flashed here, right? When prices were here at 211.70 something. And then prices dropped down, you know, the best part of a percentage. And then came back to exactly the same fucking price they did beforehand, which is exactly what it does every frickin' time. Add that to your 100% record. This is the best indicator in the world. This indicator doesn't try to do anything other than what it does, and it does it better than any other indicator in the world. It's amazing. All hail Rocky. He is a god at this. Respect the technical analysis. Thank you very much for tuning in. If this is your first time, welcome. This place is fucking amazing. If this is your second or third time, then you're well aware of that. And if you've been here for a while, then you'll have already hit the like button, tweeted about the show, told all your friends it's on, and knocked the phone off the hook. James Bond meets Tradespotting dressed to kill. Hello. Does James Bond talk like that? James Bond. Hey, Jamesy. Yo.
Our situation has not improved.
It has not improved despite the volatility. So prices went up, they went down, they went up again, they went down again. And here they are back where they began. Though we have recovered the basis line within our Donchian channels. And now we're going to go up and touch the top one in the 50 period moving average at 200 and... what's that? 12.23. And when you take the time frame up here, you can see what about these Donchian channels. Well, here's where you came in. The wick is now the new low, as prices were going to catch up anyway. The Donchian channel was always going to increase, you know, because of the look back period and the candles falling off, namely these ones, and then secondly this one. And it was always going to be these wick lows where this Donchian channel band came in at. And here you have prices closing there on a 15-minute time frame. Not bad, son. Not bad. Better luck. Better luck next time, bad guys. We've got ya. And then up in this time frame, you can see there's your basis line that you're aiming for. Again, it's the yellow line. It's up at 212.95. 50 period moving average above that on the 15-minute time frame. And the 236 Fibonacci retracement. At that point, you've gone past 3 levels of resistance. So how much can you reasonably ask for in a 15-minute time frame? Well, I think I can reasonably ask you to suck my balls. So go fuck yourself, Reasonable Land. Go there, prices. Go there. And then top Donchian channel, that comes in at 213.91. Isn't this lovely? Oh, yes, it is. Go up there, prices. And what does that mean? Well, that would look great. You'd have had a test of this lower level, this demand line. You'd be looking at your 200 period moving average and thinking maybe you'd had a trend check after your slightly divergence within these areas, right? A lower high on prices and a higher high on price action. Now that could be bullish divergence. Let's see how it turns out. But within these lows, you also had bullish divergence with a higher low on your RSI, a lower low on price action. So this also as well looks like, again, you know, we've talked about how prices react, or are they reversing? Is it a trend check, or is it a reversion to the mean? Are we continuing our trend? Is this accumulation? Are we putting in higher highs and higher lows? Or are we putting in lower lows and lower highs? What's going on? Well, I've already told you what's going on. I already frickin' told you, buddy. That's only the 15 minutes up to the hourly time frame, and you can see these lines, they starting to make some sense now. This, the lower side, this demand line, this is the top side. This is a supply line. This is the area you are targeting. You got there once. Let's do it again. It's the 618, this 0.65. It's the golden pocket. It's where we like prices to be. It's where prices naturally like to find themselves, and they bounce between the 236 to 618 commonly. So what does that mean? We want to see opens and closes above 214.14. That would be lovely jubbly. Thank you very much. At that point, you'd also be looking and saying, we covered that basis line of that Donchian channel that Jamie was talking about earlier. Jamie, aka Tradespotting, aka JME, aka Jesus, was saying if you open and close above these levels, then you're, that being the Donchian channel, the basis line, having tested the bottom side of things, which you did, you know, you tested it. Nice job, lovely jubbly, as we said. Then you'll come back up and you'll test the top side of it. And where does that come in at? The 0.5 Fibonacci retracement, up around $219.78. Lovely jubbly. Is that where prices finished today? Who knows? Blue knows. Cheerio, 10 in a row. Fair play, touche. Okay, so up here, you're looking at the top of that level. You might see go a little bit of an extension. Maybe your body close, your previous area of resistance. Is it likely to be tested again? Fuck yeah. Look at the DMI, you can see, well, you've still got, even despite this price action on this time frame, you've got in higher lows. You most recently put in a higher high, so your DI positive in ascendancy, and then you see a positive slope on that. And when we do, your ADX is only a hop, skip, and a jump away from the 38. Lovely, lovely, lovely. We fucking love this shit. 4 hour. That's more of the same thing, but even a cleaner picture. This is what we call, my friend, this is called an uptrend. And if it continues, we don't call it an uptrend anymore. We just shout against the wind resistance. And as we fly by other people, get the fuck out of the way. And that's what you're looking for. If you can break this downward sloping diagonal resistance, which is apparent on the 4 hour chart. Let's squeeze price action down on this. Zoom in a little bit. This way, zoom out, sorry. And you can see, price action has evolved within this sort of shape. And perhaps, there's some reason there's this line here. The minute we'll skip the 4 hour, we'll come back there. We're going straight to the free day. Nope, going to the weekly. Here we are at the weekly. So we skip from the hourly up to the weekly because we saw something in the 4 hour that cut through lots of candle bodies. And you might be wondering why. And it is this overhanging resistance. And there's lots of different Fibonacci's. There's Fibonacci's horizontally, and we've got them vertically. We've got lots of support, horizontal support and resistance lines. We've got our Donchian channels, and we've got our moving averages. So it's quite hard to see what's going on. I'll hide most of that. And here you see this line above us that's now no longer drawn, but represented by these highs of these body closes, and perhaps cuts through this wick. And you go dunk, 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 and you can see you've got a diagonally sloping resistance line on the weekly time frame, my friend. So it's important. And so what does that mean with weekly closes and tomorrow being the end of a week? Well, you tell me, right? If you don't understand how to work things out that much, then you're fucked, right? You are. The 3-day, you're above your short-term period moving averages, you're above your longer-term period moving averages. You've got a positive cross, you've got a positive slope. You give me a lager drink, you give me a whiskey drink. We're going up, right? We're going up. And the top side of this resistance, you look horizontally and you can see over here, also comes in at the same sort of level as that diagonal would put it 278. And whoa, just turn it back on again. I know it's a lot to look at, but you know, where is that? It's around 230, 41. Okay, so maybe you've got a wick and you've got a body suggestion around here. You've also got a fake out zone. You'd need to get above that 270. So between 230 and 270, you're thinking, hey, yo, buddy, you tell me what's going on. Shut up. Shut up. Well, it turns out that shitloads of birds have decided to nest in the tree outside my house. And they talk all the time. They talk total shit all the time, these birds. They don't sing. They talk shit constantly. Right now, they're talking so much shit. Anyway, this is like that. You know why they found this neighborhood, right? Anyway, in a weekly time frame, they go back down to the 4 hour now that we covered why that line intersects with what might seem to be important price action. Well, that's why, because we talked about it there. And you're looking at this and you're thinking, well, that gives you some idea that perhaps you're in an equilateral triangle, which itself would be equilateral in its these two lines that you see meeting here at the point, and 75% of that would be said to be when it would break out. And you would say, well, it's equally likely to be bullish and bearish, but you came into it in a very bullish formation. You came into it with a very bullish thrust, and it's going to likely exit it in the same formation, same fashion. You can now say then, well, if that 4 hour isn't right, and you're actually like saying, oh, what is that 4 hour if it isn't an equilateral triangle? It's quite easy. Just take this side of it, take it up here and say, well, it's just an ass-ending triangle, isn't it? And you can go to the kitchen, get a spoon, and eat my ass, you fat elephant's fanny, if you're going short on this thing. You're covering the center line of this ending triangle right now, so defeat these people. 230 to 270 doesn't seem like that big a deal to have a sudden. It does give you an intermediate stop in around here, your 618, your 0.65, your 1618, various extensions and Fibonacci targets that you'd be looking to between your 270 and this top level of resistance, which should be over $300. So you've got your short-term areas above you, you've got your medium-term areas above you, and you've got your slightly longer-term areas above you, with the dynamics between them and the implications for each, so that you can work out ahead of time what's going to happen. You already know what's going to happen. Not just because I've just told you today that's what's going to happen, but also because I've been telling you for weeks and weeks and months and frickin' ages by now. Hundreds and hundreds and hundreds and hundreds of hours. And it's been so much fun. I've made more friends than I've ever made doing anything else in my life. I'm closer to most of you than I am to most people in real life. Appreciate every single second that you spend with me. Thanks. And paying it back big time, because I fucking know this shit. I know it better than anybody else. And like I said earlier, if you're a fanny, no problem. I'm a fanny magnet. I'm used to it. And you can suck my fanny balls. Mike, I'm not Cat, Simone Cooper, Homer, Mike Fitzpatrick. I hope Stefan S is there. Can you please, here we go, damn goddamn work coming up now. Can you please go into detail what Rocky's DMI actually shows? It shows the strength of a trend, the likelihood of a reversal, and incredibly accurately, it shows both the upcoming periods of volatility, when it's going to start, what the price is going to be at the time, the price it's going to come back to, and potential likely moves either side of those two areas subsequently. It does it frequently, it does it perfectly, and it does it very, very fashionably. And I don't mean late, I mean sexy, 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 kicksy. Sexy, exy, kicksy. So this is what I should keep up on. Yesterday I talked about how Sweden was the third largest demography among us. I was actually incorrect. It was Canada. I made a mistake. I apologize, as I always do when I make mistakes. I was wrong. So Canada, I'm sorry. Sweden, I'm also sorry, because it's disappointing when you find out like that. I know how it is if you're a monkey and somebody gives you 2 cakes and takes one away, then you're actually unhappier than some other monkey who just got 1 cake and never had one taken away, yet you both end up with the same thing at the end of the day. Those Swedish monkeys will be slightly less satisfied than the Canadian monkeys. But that's by the by, because where you come from doesn't matter, nor does it matter what your constituent parts are from a biological perspective, because let me tell you, you're becoming increasingly female and you're getting older and older and older, right? So if you can't deal with that, I don't know what to tell you, because it's an inevitability at this stage. I know charting, that you're going to get even more female and you're going to get even older. But on the bright side, I can promise you that you're going to get really, 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 really wealthy if you stick with me. If you stick with me. Swedish, German, Canadian, Korean, Swahili, English, American, Swedish, Canadian, Swahili, Jamaican, American, English, Scottish, Korean, and America. All of those countries. Please add an ETH at the end of your apology so the Canadians will understand you. I am sorry, ith. I am sorry, ith. Canadianiths. And saying the wee Scottish coast is the longest, the Scottish coast is the longest coastline in Europe. Scotland has the longest coastline in Europe because of the paradox, the Pythagoras paradox. So, you know, it's lots of squiggly lines, and when you straighten that all out, it adds up to much, much, much longer than a straight line. This is also analogous to the emotional journey that you'll have been on watching the price of GME, and I understand, I empathize, and in fact, I come from a land of squiggly lines. You forgot Bulgaria, Jamie. How could I have forgotten Bulgaria? Don't be silly. Bulgaria is amazing. I love Bulgaria. There's only one thing that's wrong with Bulgaria. Well, there's 2, right? There's 2 things that are wrong with Bulgaria. Right, actually, there's 3. In fact, there's quite a number of things that could be better about Bulgaria. But that's not far be it from me to tell Bulgaria what's up, right? Nor critique the Bulgarians. It's not for me to do. I doubt that Vlad really even fucking is Bulgarian at this stage, eh? I mean, is he? Is he? Like, is he? Ugh. No, Norway is longer by 3 times Tradespotting. Why don't you suck my hairy balls, KT? It totally isn't. Scotland is the longest coastline in Europe. And you've made a mistake there. Unlucky, but nice try. Maybe you're right, technically, and that Scotland was previously in the EU, Norway wasn't, and then now that we're not, then technically we don't have. But like, if that is a technicality, then I sorry, let's call it a draw. Let's call it a draw, yourself and with Norway. And in fact, let's get much better relations with our Norwegian friends. It's a beautiful country. It's a fucking beautiful country. Once when I split up with a girlfriend, I decided I was going to go on dates with fucking loads of different chicks all over the place. And I then got planes and flew all over the place, dating chicks all over the place. And at the end of a year, I think I went on something like 360 dates in 1 year. Which, yes, means I had to go on multiple dates on one day. And I had to do it with multiple days to get the odd day off. Anyway, I ended that epic odyssey in Copenhagen. No, not in Copenhagen. In Copenhagen, not even in Norway. So that wasn't even a relevant story. Oh well. Sorry, Norway. That was a nice chat. But Denmark. How are you doing, Denmark? Scotland and Denmark, we're like brothers. You know, we really are ancestors. Or who knows, some sort of family anyway. We should get closer and be friendly. Those Norwegians are trying to pretend that they're the most coastline, apparently. Shit like that's going on. We need to stick together, Denmark. Well, that's the way it is. Also, you've got a lovely place and that with bikes and all. Fab. Really love it. Lovely. Prague has a nice female/male ratio. What does that mean? Like, that stuff's completely irrelevant to somebody like me anyway, right? That's completely irrelevant to someone like me. I could give a shit what the ratios are, right? Doesn't matter when you're me. so that's not relevant. Also, what would nice mean anyway? Right? We got some BDE in this place, and all of the people in Prague. Welcome. You are much more than a ratio to me. You are also a badass place, cool history, lovely old towns. Speaking of coastlines, what are your thoughts on Amsterdam? It's fucking amazing. I lived in De Pip. De Pip! For a while. Loved it. Govert Finkstraat. Lovely street there. Loved it. Stayed there for a long time. Swedish chicks are the best. Change my mind. No problem. I can't change your mind, Shane. Nor would I be inclined to go about changing people's minds. That's not my intentions. Now, what is the mind? No matter what is matter, never mind. So yeah, what was we were talking about? It was probably something really, really important. What was it? Oh my god, you're so full of yourself. Well, it wouldn't do if I was full of somebody else, would it? That wouldn't do very well, would it? Fractal Fanny. And yeah, I'm full of myself. So what? Like, what's the implication from that? What are the consequences of it? Because I made a deliberate choice to be full of myself. It didn't happen by accident, right? So fucking, Tradespotting, can you please give a smooth brain explanation to the new 250,000 requirements for funds tomorrow? Is that only per fund? So if so, is this really going to do anything at all? Yeah, it's per fund, but you know the way funds work, right? They've got like funds of funds. And I don't mean that in the terminology that you're probably used to. Just like within funds, you've got various funds. Like, yeah, you've got your collateral. Like, it's the overall collateral position is what all these rules refer to of that fund and that broker, usually, right? That's what we're talking about here. Or it's not. But anyway, what's the question exactly? So that I don't answer shite all for ages. Smooth brain explanation. Okay, well, I'm not all that unsmooth myself. To the new 253,000 requirements for funds tomorrow, right? Okay, well, it's just a collateral. It's like, I think it's this starting CATS, is it? That's what's starting now, and they're getting rid of OATS. OATS is like something that wasn't implemented all that long ago. Like, if actually it only came like on stream after I left the bank. But we were all doing it for ages beforehand, and I expect everyone's doing CATS now and has been doing it for ages too. So immediate implications, I don't think there'll be any. Like boom, bing, there you go, bing bong. Price is still wrong, but they're not going to flip a switch and that's going to all of a sudden liquidate somebody. I mean, that existential concern, you would have anticipated it beforehand. Plus, you try to get these things to work on time and in the right way. There's a huge misconception about what goes on at banks and where the nefarious activity takes place, right? It's banks are split up in various ways. For a start, you've got commercial banks, and then you've got investment banks, and then within investment banks, you've got various types of investment banks or various types of financial entities like liquidity providers, hedge funds and whatnot that operate at various different levels, but to an overlap of different types of clients. And it's very much separate, all of the collateral that's used for those type of activities, from anything that comes from commercial banking. At least it is over here, and has been since like just in and around when I left. It was all like dead separate at that point. That's not to say that it is actually, because like Chinese, like these ideas that like Chinese walls, like it might work first in terms of like the definition of where one collateral ends and where another entity of the bank starts, right? Sure, fair enough. You could write that down, but there's like ethical lines that can't be crossed in certain senses. And like, while that's quite an abstract concept to consider, it's maybe you can understand it easily if you think about the current activity of greenwashing that's going on across various funds, where they make them mix in really bad for the environment commercial activities with like the odd one or two that looks quite good or is maybe quite good, and end up then packaging that thing off and selling it as a green fund, and it's just greenwashing, and the fund itself isn't actually. And so anyway, like there's like this ethical blurring when banks do that thing between as well as if Barclays are doing that, right? Which they may well be. Hi, what do you reckon? Do you think they are, right? Am I saying it for no fucking reason? Or they might be doing that, right? And they might also be, who knows, right? Allegedly, not even. I'm just speculating, not even saying it's alleged, right? So fuck off, Barclays. And the other aspect of it is like how do you separate one aspect of the bank from this terrible fucking thing they're doing, which itself is perhaps like, if not illegal, very highly unethical. So how do you work that system properly? And it's like the same with this here, where they're like, well, no, actually that collateral is separate. Sorry, thanks. No, that's not because of that risk. That's not the same. And you're like, well, it is really. In ethical lines, you're just blurring things. You're not. The truth is, you're just a bunch of bastards, like in all shapes, forms, and senses. So I think that there's no possible way around things, not at all. Anyway, the way these things work is that people act and they can claim ignorance, and those decisions that are made that are like the secret ingredient is crime. Those decisions are made at the fund management level and in the execution, and not even necessarily at the fund manager, right? It might be even above that, like higher, like the infrastructure of the business, right? Because there's a point at which risk assessment flips. You get high off in the hierarchy, you're right at the top of the chain where you're making decisions about what investments are made or how the algorithm works, or what sort of changes you make to X, Y, and Z plans. And like usually that's like not a lightly made decision, but above that, right, you've got another whole group of alligators, and they sit around and they have a different risk profile. They look at the business, and they look at the collateral, and they look at the overall position of things, and they look at the different divisions, and they look at the different people who are doing things, and they then decide, who they're going to let into the fucking next lizard level. And give them a little lizard card, and even give them maybe sometimes a little lizard badge, right? Fuck it. And so these fannies, at that stage, they've got a whole different perspective, and you can be right at the top of the chain when it comes to the analytical hierarchy, or at the accountancy hierarchy, or like the fund management, or like the administration, or the compliance side of things, right? And all these different parts of the bank are all different. They're all different. Really different. And when you come along and you say like the SEC and a bank's done something that's against the rules, you'll fine a bank, right? And that bank will likely have to pay a fee, will likely absorb some of those costs by fining otherwise departments that otherwise would have had bonuses and so on, right? So you come along and you're like, you break the rules, and let's say, right, you're Citadel and you break the rules, and the SEC come along and they fine you like 700 grand, right? Right? Some people find the whole thing abhorrent because you might be getting fined 700 grand for some activity that you derive profit from many, many times over. Like say you made like $380 million or thereabouts from illegal activity, and at the same time you got fined like approximately $700,000, right? Approximately like something like those sort of figures, right? Allegedly, right? And that's all happens in your Citadel. That $700,000 is a little bit annoying, but you're not paying it as the fund manager, like, despite that you easily could do. It's the person who pays that, nor is it the crocodiles that live above them. It's in like the absorbs will be absorbed by the department that would have otherwise got it, say, compliance department. They'll come out of their bonuses at the top level, and then to maybe the particular people who they're able to say, well, this was a time problem. This was just timing. You see how how this wouldn't have been possible for us to do it any quicker, because of these circumstances. So it was a timing issue, and essentially, what we have to do within, so why it takes us so much time, why T+2 even exists, is not our fault. It's because we have to do so much compliance, and then our poor compliance staff, they're underpaid. You can't fine our poor compliance department millions and millions or hundreds of millions of dollars. We only pay them fuck all, right? So you can't do that, please. It's only because we're trying to do the compliance for you in the first place to meet your rules, which they came up with to help create these convoluted loopholes that they can get through and make complicated for you to track and find out what's going on, which is why after so many decades of this, we find ourselves here and now. So, like, there's these distinctions, and a lot of people, even at these banks, at the top of various hierarchies within them, won't understand how the collateral position of these things work, right? They won't. And so, 211.99. And so, that's price of GME. So, you're there at these banks and doing these jobs, really highly focused on understanding one particular aspect of one particular market, maybe even for only one particular commodity or whatever it is. And so, you can't possibly be expected to have any understanding of these other things. And so this is why this revolution in financial literacy that we are conducting, where we slash and tear and rip at the bastards, they've got fuck all defense, because while they had used against us a force, a power that was insidious and evil and used across multiple generations to instill a sense of ignorancy and impotence within you and make you feel like powerless to the insidious nature of this evil, what they didn't fucking understand is that we can actually figure shit out that they don't understand, that they themselves don't understand, that the majority of people who work on that other side of the fence don't really have much understanding or concept or grasp of anyway. And so they'll sit there and think they're fucking fine until the last fucking minute because they don't know what's going down. And these collateral changes, from a practical perspective, will be felt by them, enacted and implemented at the trading floors, right all the way through down to the compliance and through all the forms of accountancy and everything else in between. But the people who are actually taking advantage and abusing the rules are slightly higher up. You know, they can see what's going on with these collateral positions with these funds. They know what's being happened as everything's being signed and filled and filtered up the chain. And they can get the final reports, top level things with the bottom lines on it, and see these details and work out this information and have it presented to them perfectly, digestibly, and in the best possible manner that they can then use to abuse the rules again and try and get away with shit again. And so this is one of the ways that it's been decided that will close the gap where they're able to exploit and take advantage of you, is that they have come to a negotiating process where they will have accepted a change from OATS to CATS. And we're supposed to be happy, right? Well, I'll tell you, as you may already know, that the negotiation process was between these 5 big banks that control Wall Street and control the New York Fed, which has a disproportionate control of the entire Federal Reserve system hierarchy because of the nature of the way they go about things, and has already undermined it 12 years ago, 2008, with the way they handled the whole fallout and taken control and have undermined your democratic rights. Those banks were negotiating with all the other bastard of banks that profit and only exist in order to serve them and can only exist because of them and are 100% reliant upon them. Those two people negotiated together what they thought would be quite a good way of fucking you over again. And they call it CATS, and it looks kind of legitimate, but of course it's more of the same bollocks that nobody who's actually responsible for doing anything with it understands very much of, and those people at the top understand so much about they can use it and abuse it. But what they fucking didn't realize is that we're here every day. We've got people from every level of all different industries, from every side of the fence, some of whom are still over there talking to some of us still over here, telling us stuff that they don't want us to know about how fucked they are. And we're not going anywhere. And we're never going to sell. Maybe we're never going to sell. So, yeah, they've got these new collateral requirements that seem considerably higher than their previous ones, but are absolutely fuck all. you know, we're talking about liquidity providers. So don't say to us when we're like, well, you should be paying more than that. That's fuck all. Oh, no, I've got no porridge. No, fuck you. I have to eat porridge because of your shit. So that's the GME in that sense, that question. On the AMC, so on the AMC, thanks very much for D yesterday for the donation on Willow and that, because it didn't come up on screen. They don't see it on the YouTube ones at the time. And now, of course, now nobody sees any notifications about any donations whatsoever, because none of it comes up on screen because I fucked all this shit up here. But whatever. My area of expertise should come clear quite quickly. Now we're on AMC, price 44.01. That's great to see it's still in 44, though I'm not enthusiastic or emphatic about the idea of it going up from here, even though we are on a demand line, we are tracing things up, and we have put in what looks like the lower bottom. We're on the 4-hour time frame here, a lower low, and then with divergence, and then a bottom information, sorry, is what I meant to say there, coming out of a bullishly orientated pattern within an overall larger bullish pattern, and here we are again at support, and don't you buy at support as opposed to resistance. But that's true and everything that you're saying there, but that's not the consideration to be making on the 4-hour chart. Those other things that I said in advance of it are, but then you look at it and you think, well, this is not a very positive picture on the RSI here, which is the relative strength index, and of course give you some idea as to regards to the strength of the trend and the momentum and all other aspects to it. So and then you look at that and combine it with the DMI, and you can see here that this large downward slope on the positive trend. These are not typical accumulation zones for either of these two indicators on the 4-hour, so that's not particularly desperately positive. We'll go down, start now again at 5 minutes and put on auto. You see, yeah, okay, that's not bad, right? That's a higher second high. It's still in an uptrend, but again, this divergence is now that we saw that looked ugly RSI on the 4-hour. Now we can see why. It's because it's divergent down here. I look at the wrong camera again. There's parallels with the symmetry discussion there. Anyway, yeah, right, okay, before I get sidetracked, right, you've got this below the center line, you've got divergence set high here on between these two with a higher high here, and then again across between these two previous highs, because of the body closes being higher and RSI being lower. So you've got 1, 2, 3 touches of divergence, 2 on like a different sort of dimension, but still it's relevant. And then below the center line on the RSI here, and you can see no strength of trend here, so you'd need to see that change. You'd need to see some positive momentum coming in. You're not seeing it yet on the 15 minutes. And then we go up onto the 1-hour time frame, and these drawings become slightly clearer, and you can see the Fibonacci's more easily. And within that, you've got this. Where is this one exactly? From your breakdown area around $50 to your low beyond the period of most of the trading in this area has been done to below $32, all the way down to high 20s. That Fibonacci, which you're going back up again now through, you're retracing against that downward trend. This is a Fibonacci retracement tool for measuring the strength of that retracement against that trend. There's various numbers within the sequence that take on importance and have like relative importance for each other, and the nature of price action and its behavior in and around each of them does give you further information about what's likely to come. And what we can see from it here is that prices went, and I'll draw that Fibonacci on myself because I don't trust it seeing it there. There's the low, here's your high and the low. You got back up above the 236, and you put in a positive test of your support, which was that point became support, was previous resistance, and that was the definitive area to enter a trade. It was obvious at the time. You also had this trend catching it here, and I called it, obviously. The fuck, obviously. And I also called everything else all the way fucking through here, obviously. Anyway, then you came in, you put in higher highs, and you put in higher highs. It's still like that, but I don't like the fact that what that looks like now on this time frame is head and shoulders on your RSI. And when you do draw that over here, you've got your left shoulder, you've got your head, you've got your right shoulder, you've got the perfect picture for divergence within it. And you can see here, well, where's the trend break? It also breaks at this upward slope and diagonal, likely. Yeah, it's in and around there, and you're saying you're 382 on that lower part of this smaller Fibonacci. comes in at 42.62, looks like a likely retest. You've got your 50 period moving average above that, so, and your 0.5 Fibonacci sequence of the smaller fibs. Likely you do, if you slip below that, then see a period of what does price action do? How does it react? Because if it does end up being a trend check, you've got your 200 period moving average just down here at $37 and change, right? And on the way there, you've got other various important areas like $39 and some change. So, like, how does prices react should they not maintain this trend at this area due to that weakness we saw as represented by divergence on the different time frames and the ugliness and the areas and the weakness in the trend that we've seen across the indicators? Where does that lead to? Well, at 39 and change, then down again at your 200 period moving average. That's a trend check. That's so likely to happen having broken the previous trend, which was downward, started putting in higher highs, and any lower test on this hourly time frame, then you can accommodate that, right? You can stomach it. It's not such a big deal because on the 4 hour, you can see here any sort of lower low within this formation here. It doesn't matter if this wedge is real or not, or if it means anything or not. It's not really interesting. It was relevant for the psychology that was likely to come at the end point, which happened in the measured move, which we got, and everything about it, which we already talked about. It's within a bigger, greater bull flag. We could maybe come down lower and put in a touch on a 1414 or a 1618 retracement from this Fibonacci that we talked about earlier, that large to the low. And no, this is the actually that Fibonacci there would be interesting to look at. Say this one here would be just 50% or above. You know, you're 382 from that, and your 50% retracement in it around these levels, high $20, probably not getting there, right? It'd be too much of an extension on the lower side of this trend. But the 382 there at 27 and change, that'd be fine. That'd be totally and utterly fine, right? It would actually be cool because that point you'd have tricked shitloads of people, and most of the market is wrong most of the time. That's a truism, which will always be that way. It's how the markets work, and I am not denying. I am investing in my future after completing a thorough risk-reward analysis. I'll never going back to reasonable, and watch, like, comment, please. Wolfwick Doomslayer, you're such a legend. I'm so lucky to have people like you and culture that you create among other people, and how much it does for the channel. Thank you so much, and for everybody who takes Wolfwick's lead and does those sort of things. Thanks so much. Appreciate it. Cheers, mate. Nice way to put it too. So yeah, you've got Fibonacci extensions, and within that you're likely putting in some type of potential harmonic, and that would be the natural resonance of prices, and that's what I say when it would be fine. You'd also get tests of these 200 period moving average where you'd maybe even get bought at $34, maybe higher than that. Like I say, 39, and you'd slip out of this channel, back in again, trick everybody that way. Most of the raw market is most commonly wrong, so bear that in mind at these inflection points when you see these areas of weakness. Do you get the drop, the return to normal, and then the let's test the same thing out on the other side of the neutral zone? Raymond Chamas, thank you so much for joining as a member. It's really appreciated. You can do that by clicking the join button next to the subscribe button. If you don't see that, there's a link in the description which you can click, and it's really appreciated. Everyone who supports the channel. Also Patreon, which is the same deal, www.patreon.com/tradespotting, where you can support me the same way and get lower fees, and try to do everything I can for everybody there. You know, I am trying to help people. And it's a shout out to Famous Seamus. I love you, mate. Thanks for being sound dude about everything. I think hopefully, I don't know if I met you in real life, I'd have a better understanding of things than that, but I hope we're better friends even than we were before. I know. Thanks. When Fanny emoji, good question. Yeah, I've got a picture of one that I've yet to put up. That's because everything else goes wrong constantly in it. I'm just getting not a cat. Bum bum bum. Daily time frame. You know, this is positive, right? You've still got like that would be natural to see some sort of turnaround on the RSI, having first reached up to the bullish control zone, having gone through such a positive move around the center line, come back, test its own moving average. That's nothing. You could at least expect it to come back to the center line here, which may be what it does, because like we were talking about that head and shoulders there on the 4 hour, the measured move out of that will take you down to this. Probably just into, anyway, this, say that's your, to the bearish control zone, that's the breakdown there, yeah, now you just into it here, higher low on your RSI than previously, lower than this most previous low though, because that would be likely because of the way this would react and how market psychology would be at the time. You'd likely get that buy signal in there and people would be shitting a brick and it would be the perfect buy. Coming in, the higher low in RSI, even if you got, even then it got a lower low on price action, a massively bullish divergent one and a huge reaction, that would just fuck so many people off and it would be so very typical of how this asset's been performing recently. Whoopity whoop whoop. Harmonic lesson today. Yes, there's a harmonic lesson later. Might not be a really extensive, desperately long one, but it'll be a good one. If it's short and sweet, then it will be sweet. And I'm going to go up to Rockies as soon as markets close today and get prepared for that. Thanks. Nice jacket. Thanks very much. Thinking of selling my ATIG. Sorry, I meant AMC to go all in on GME. What would you do, Jamie? Well, I've got AMC and I'm not selling it to go in on GME, but that's because of the way I trade and the decisions I make in advance of where you might be at the minute. Or maybe you're at the same stage as me and that's why you've got both and you're saying, that's why you're asking that question. What would I do though? That's what you're asking. Mark Anthony, there you are. Fuck. Mark, you're a good guy. How are you doing? Great to see you again, man. Hey brother, hope you're well. I'm good. How are you doing, man? Can you discuss your thoughts about price action around earnings? Will do, no problem. And what was that previous thing that I was just saying? To Black Irish of Montserrat. Thinking of like it's difficult for me to give that type of advice. Like one hand, it's like unethical for me to tell you what to do explicitly with your money. Also, I'm a sort of person who would tell you if somebody else was doing that, to tell that person to fuck off. Like I really feel that. So there's that aspect, how strongly I'd feel about that ethical sort of thing. And then further to that, there's another concern I'd have, that I don't want to have any negative effect on anyone who's holding either of those two stocks. And so your sentiment about things, which is included in the question, and I have full respect to you, I'm trying to give you this respect by talking about this here. You in your question include the sentiment that you feel about AMC or the relative sentiment you have with regards to the two stocks, and then ask me what I would do. Well, first off, I'd have to point out that those are your sentiments, not mine, and that I do believe AMC's got a big move on it, a huge one, and that likely that comes not in the distant future, and that these prices aren't expensive prices. And so if you're like hodling this thing, which is better way to do it for the consideration of your other market participants, which I know you probably care about and they care about you, and I know I think your name's funny and I think I maybe have read it before, maybe your name's changed from something and we've spoken before, because that happens all the time. Good seeing you too Mark. We'll get to that question in a second. And so Senor from Montserrat, I think it's not my advice, like there are places where it may go down here, and that's your own trading style and whatnot and your own philosophy, and that kick that into account and make your own decisions. And I've given you everything I can say about what's going to happen there with regards to the TA, but I didn't maybe talk about the top side, right? And so I'll do that now to give you some part of an answer and then maybe answer your question and then say what Mark was saying. So within this, right, this is a breakout of this formation, and it is a continuation of the previous trend, and the trend is your friend until it changes. And everything I talked about lower levels was all about a trend check, and that trend check acts as like a high five when you're passing your mate in the street but you're both busy and going somewhere else. High five, I'm off again at slightly higher rate of velocity than you are, but I'll see you again in a bit. And that's what it's like, especially, and I hope for you watching along, like that's what it comes like with your mates, and that this helps add that velocity to your life, right? So what does it look like when it comes out? Breaks out and it does retest. And all of these areas, it's like trying to retest its own linear progression, but that is not so important with regards to its logarithmic trend, right? It's not very important. And as you can see, this is a logarithmic chart. And that's how I do my TA, because I know how to do it properly. And so that's not a reference to you, Senor from Montserrat. It's just me talking about how I like to do things, right? So anyway, you got this move, you got retest. It may be of that linear progression. It may be of these trend identifiers. It may be of these Fibonacci levels. It may be these horizontals, and it may be these moving averages. It may be any of those things, or it may be reaccumulation across the momentum indicators, or it may be that you get a signal given on the DMI, and any or all of those things would be interesting and be probably a buy at those stage, all of them. And one of them is now, because you're sat on one of those right now, this diagonally sloping, quite obvious demand line on the weekly time frame on a logarithmic chart. It's interesting, it's relevant. But do you drop out of that line to retest the breakout of this formation before then continuing that longer period trend? Do you or not, right? How do you manage that position? Is it selling it and buying it back there and trying to get that extra margin there? It doesn't seem like it's worth the risk off the top of my head, and nor would it be positive to talk about that kind of thing, right? So, and I'm trying to be ethical here, right? So if you've got a problem with what I'm saying, anyone has a problem with what I'm saying, honestly, you can stick your head so far up your arse, right? Anyway, so like you have to manage that situation emotionally for a start, and that's why it's valuable doing TA all the time. And so anyway, another reason why, anyway, fucking hell, what I'm trying to say is, it's very difficult to manage the small moves on things and make your account worthwhile over time, especially because of the margin for error and the attrition with fees and so on, and that's difficult. You're managing risk here, not $5, right? You're managing risk, and so there's implications to that practically, and with regards to how well you're able to execute and manage. So within these time frames and within that range, I don't know you, and I can't advocate for doing that, right? If you were as good as me and some people thought you were Jesus, yeah, sure, you could do whatever the fuck you wanted. But there's a good piece of advice to people, I don't know, and because it's AMC, probably not a good idea. Like, I huddle it, and it's more about where you'd buy more of it. And if you were then trying to get out of one and into the other, you'd want to do it at one's high, and you don't have to go from one immediately into the other like that. You don't have to, right? There can be a period of time where you take patience and use the charts and TA and keep dry powder and make the most of that opportunity, right? There can be opportunity to do that. And so if you are doing that, the area that you may prefer to do that on with regards to your AMC, and I'm not saying anyone should sell it, I'm saying there are higher targets on it, 97, 107, 137, $300. These sort of, these are all, the charts have all said, some of them, some bits of them, those targets above it said weeks ago, and I've said them on this channel and other people's, that those are the targets. So it's about how you do manage it from here to there, and obviously I'll do the TA with you every single day from now till whenever you're happy having exited all of your positions, mate. And what was I going to do? I was going to do that, talked about the upper targets. Well, I kind of referenced what I'd already done on it. Mark says, what do I think about price action in regard to earnings? Well, Mark knows I'm a big believer in educating everybody with regards to the psychology of large accounts and how to trade on the right side of the rich poor divide, right? That's what it's all about here, where hopes and dreams meet ends and memes. And you'll have heard me say before, there is no help in rushing to be rich, and plenty of wealth in waiting to be right. What happens with regards to these events? Well, you perceive them in a completely and utterly different way from which they happen. Your understanding of consciousness isn't perhaps quite what you think it is, and that'll be used against you. So when the event actually happens, that'll be after the news, and that'll affect your psychology at that point. And so you'll never be in synchronicity with this event. The psychology will dictate your feelings and your emotions. And I'm not just speaking about you, but the market as a whole significantly. These things tend to work in certain ways. Everyone gets excited, so the price in advance rushes up. That then moment of time when prices have reached that spike in volatility, then the question becomes, are they going to boost on up shitloads more, or are they going to retrace? And at that point, you'll have to look at the market as it is and the asset that you're trading. And with regards to GME, you're going to have to look at the open interest by the strike price. And you're going to have to look at the extent of each move. You're going to have to measure its volatility, and you're going to have to compare it to its recent past. And you're going to have to say, this is either abnormal, normal, typical, atypical. This behavior is going to result in a reaction. What that reaction might be. Well, most of the market is most commonly wrong. And if there's a huge spike in volatility and a big distance in prices, the range of prices is unusual. It's out with the standard deviation, and they can measure that in various ways, as you see me do commonly here on the charts. You can say at that point, what's going to happen? Well, there's going to be a change in the way that the risk is managed by the market makers, and they're going to change their profile. Prices are going to change. Then liquidity positions at various levels will change, and there'll be a reaction to the close with regards to its distance from open interest, the significant levels of open interest, and the relative strike price at its most recent expiry, and the next one coming up, right? So you look at all of those things together, and you think this is the event psychology, and you feel a certain way, but you look at those things and you understand what's happening, and you know that the events are actually happening before your psychology, and you can react and understand how things are going to go. And that'll be either at earnings, things come back. Why? Well, because of the market makers changing their position, because of the risk profile changing, because of the value totally changing, because a totally different price equilibrium will be on offer, and the prices will look to the path of least resistance. And that's what you've got to look to. And you've got to think, well, hey, this is the event, this is the psychology, this is the reaction, this is the rumor, this is the news. And you got to think, well, why would it be that prices, when they start moving one way or the other at that event, at the date of earnings, at that announcement, why do they move? And how is that position being, that known reaction being managed by the C-suite of the company that you're investing in? How do you perceive their ability and aptitude to manage this macro big picture aspect of investments? Because that's what we're fucking talking about here, right? It's not flipping burgers. It's not selling secondhand computer games. It's understanding macroeconomics. It's about being one of the guys that knows how the world works and makes it work for everybody else without fucking people over. And we'll look to those good guys on our team who are fighting for us, and we'll say, well, how are they going to manage that moment? When it will be that moment where prices, where most of the market is most commonly wrong, where market makers change their risk profile, where the value changes, where the whole trade changes for the people who are long is short and short is long. What happens at that moment? Prices are very, very, very likely to retrace, because these people have to manage their risk. Everyone who's long is aware of this if they've got smart money in their big account, and they hedge. So they keep their open position for continuation of the trend, which is their friend, even more than it's yours. And they hedge, so they'll open other positions. Open interest will change. It's likely volatility comes back. There are large trading desks. That some of them are at big bastard banks, like that I may feel or may not feel. Barclays are. Fucking bastards! I may not feel or may feel like Barclays are a disgrace. They're a fucking stain on the planet Earth, and they should be destroyed, and they will be. They may be trading against you, the retail. They may exploit every aspect of your psychology, and they may use that moment against you and troll so much money off people who don't deserve to lose it, using market mechanics and your psychology against you. The bastards at Barclays! We hate them! We hate them! Who do we hate? Citadel and Barclays too! We hate you! And we're gonna fuck you because you fuck so many people! Allegedly. You bastards! Allegedly. So you got to manage that position. You got to see how the market works. You got to understand the psychology, and you got to know who you're fighting against. And I'll tell you. And I'll tell you how to beat them. So you manage that event, you manage your own psychology. You understand the general market psychology and the likely points at which it will shift, and you understand how they react to news, and you understand the rumors. And you hope that your chief executive and other people at the board in the lead up to earnings have got positive news to talk about so that they can control the narrative. And they can deflect from all the work that will be put in by the other side to control the mainstream media. And you'll have people like ourselves speaking truth to power at the moment that it's important, and helping everybody else with the confidence and psychology to hold at the moments that matter. This which will be one of them. And we'll hope that the chief executive and other people decide that what it would be good to do would be to announce on earnings that there is positive news. That may be with regards to hiring, say, for example, a chief technical officer who would blow people's socks away and turn GameStop from a retail business into a tech business, and then growth would fucking explode. Maybe that'll happen. Maybe it'll be better news with regards to the transition into a larger fulfillment company, and it'll raise the game of GameStop so much, can't stop. Or maybe, just maybe, they'll be announcing some new application of technology. That itself, a concept very, very complicated, very difficult to understand, to work in a practical and efficient framework which generates revenue in the best possible way and also puts up barriers to entry to your competition and further exploits and benefits both you and yourself via the customer relationship management that you have with your target market. We are going to fuck these bastards. So perhaps there'll be some good news. It may well be that on earnings that they announce that there's some form of a dividend. I don't want to speculate about that, but I'll tell you what will happen if they do. It'll be the most and eagerly anticipated dividend event psychology that you've ever fucking heard of or seen or experienced. That because not only will everybody who knows anything be on fire with desperation to get some, nobody in the mainstream media will be fucking talking about it. You watch that huge fucking massive fuck off contradiction of the people who are supposed to bring you the news. Put me on your fucking news! Put me on your fucking news! Or we'll be the fucking news. That's the way it works, fuckers. Like you're going to put me on the news. So, you got to manage the event yourself by managing your own psychology. You've got to understand that you buy the rumour. You don't necessarily steal the news because there's more rumours. And maybe they're news. And you never stop being angry at the bastards! Never! And when we've won, are we going to be any less angry? Are we? Fuck! We're not putting them in jail. We're destroying them! We're destroying them! And we know what you did! I know all about it. I know all about what you did. Nothing I say in this is financial advice. Nothing I say is based on anything. Nothing means anything. Nothing was said to me by anybody. I don't speak to anybody that knows anything. I have no idea what I've said. It's all made up nonsense madness. None of it comes with any prejudice. None of it should or can be used against me. Fuck you bastards! Thanks, Daniel. Thanks, Daniel. Thanks, Raymond. Mark. Thanks. Thanks, everybody. Right. What's next? Anybody got any other questions? Matt. Right, fantastic. Yeah, fantastic. Right, you got your take profits and that. You did well. You got your entry on this. Right, you did your take profits. You take your risk off your table. You're playing with house money. You're following it up with Williams fractals or Donchian channels on higher time frames, and you're using these as your areas for your stop losses so that you'll never, ever, ever exit this trade without making profit, and likely you'll make shitloads and you've already made some. And that was fantastic for everybody who's following along with that trade. This AGIX BTC, what the frick is that and why is it on there? Well, it's been freaking killing it up at another 10%, so congratulations, that thing's streaking out of control. This, you got your entry, or did you? You got a good trade on the go, you're up a number of percent. AEI up 8%, fantastic, looks like an entry, you got it to me. Maps. You got your entry, you didn't get stopped out, you're already up fuckloads. Yes! CLOV 6%, didn't fucking advise anybody to trade that. ATIG, not that this is financial advice, and neither are any of the other things I've ever said here. Yes, you probably got a really good entry, 382, that's an obvious trade on ATIG. ATIP, still yet to do anything, but looks like it when it does, it's going to go up to these lovely jubbly levels there, and that'll be good. And you saying that's already at 5%. VIX up 5 because everything's moving about. ADMP, it's tested this demand line a couple of times. It's doing fine. What else? SOFI up another 2%, 7%. Fuck yes, 8% nearly. Back testing this line. We talked about the potential for that 8% move for stuff that alone. Fantastic. Bitcoin dominance. You had your bounce, you've got your ups through here. This was a decision area. You're going in for another higher high, but you're putting it in divergence. It's the 1, 2, 3, 4 touches of it. So on the 4-hour time frame, it's likely it comes back for a retest, and we'll see what the next trend check is. Is it going back down to 43? I don't know, but I'm looking to, well, let's be honest, I've already hedged my Bitcoin position at the moment, so we'll see how that evolves over the next wee while. None of this financial advice. You can't copy my trades and expect to make money. You won't know what I'm doing at any moment in time. That's that. That's those things. What else? Like some retracements that might look for good entries. Naked potentially. Yeah, looks like it was interesting. Rolls Royce. I'm very interested in how that's going. You know, I think there's so much information going to come out about Rolls Royce the next week. It's going to be very interesting. And if you've got a big position in Rolls Royce, get in touch with me. Jamie, if you have time, would you look at NOC today? I'll look at it right now. Jen. Pardon me. Bum, 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 bum. How was that not on my chart? So Rocky made a pretty penny doing this. Also divergent quite heavily on the 4-hour, and you can see while there has been a positive change on your DMI and your ADX has started to point up that nothing particularly fantastic has happened with regards to trend checks. You've dropped below the 50 period moving average on the 4-hour. Haven't been able to get back above it again. The Donchian channels reflect that you're in a slightly period of consolidation, higher lows and lower highs, but you came into that quite divergent. So I would have a very, and they've not got anything with regards to volume to say that this was your buy here. Nah. So I don't think this is a significant recovery. You've not managed to get above that 50 period moving average. When you have done, you've immediately come back down a couple of times. You're on the lower Bollinger Band. You've got a period of volatility coming up, likely. Lower down time frame, 15 minutes. Good recovery from that 50. And then you're coming up, tested 200. Is that going to cross back over again? Well, you'd have this test if they were, and that's understandable. This is just a left through the center line. That's not great. You're at the same time lost the positive trend here. It has now gone into the ascendancy, the DI minus, which means your lower lows in this are more significant than your previous higher highs of this bit of the move, which will mean nothing. So now you're looking at that on that 15-minute time frame, thinking this is bad news and it's not a great end. I did a day for it. There's a 200 which you might bounce off in the 52, but it doesn't look stronger on a higher time frame. So between the 15 and 4-hour, I'd say it looks like it's going down a little bit. On the 2-day, the trend continues and there's nothing desperately jumping out. 3-day that is there with the divergence on the 2-day. You see that quite orderly progression. You at least expected test of the downside on that after that divergence. 552 likely actually comes all the way back down to $5.05. Then we'll see what happens. I still don't necessarily advise entering a trade at that point because the 200 period there and this cross coming in, testing both of those. Let's see, the 50 might be one entry. That's around $5, and then the 200 is another, and it's about $4.50, spot 55. So that's what I look like and think about knock at the minute. Jamie, can you take a look at these nuts? Sick, nice one, HJ, love it. How's the Babica coming along? Yes, I'm getting hungry. How is it? Hey, sorry, I want less rest. I want rest. No rest. No rest. Pow, pow. Where is everybody? Time is it? 44 minutes too. So I'll do Busy Ape Series and then head up to Rocky's place. Get ready for the next lesson, the free course for everybody who's in Rocky's Discord on harmonics, which is a great course, an introduction to technical analysis. I suppose it would be intermediate level, and ultimately will comprise part of the intermediate introduction to intermediate level TA course that Rocky and I get doing when we get it finished. This one section of it, but here, made it excellent. Everybody is here. If Bait Buckets and Simone Cooper is everybody. I just bought more GME. Nice work. Excellent, mate. Excellent. Yeah, I was going to at least leave it on GME. Via AMC, $44 even. Head and shoulders there. We thought that might come back. I suppose that I could just make this the Busy Eclipse a bit. I already did, couldn't I? Make it dead fast now. Make it dead fast right now, actually. Where's the record button on this thing? Hi, this is the Busy Ape segment, so if you're watching along live, thanks so much, and if you're turning up later, whoa, you must be so busy that you can't watch me live. You must be so busy. Oh, it must be hard being so busy all the time. Oh my god, imagine being so busy. Whoa, that's hard. Sheesh. Hope you're not so busy that you can't do other important things. You know, things that might lead you not have to live such a goddamn busy life all the time. Sheesh. Maybe you should get your priorities straight and whatnot, like everyone watching in the live show. Anyway, hit the like button on this clip. And everybody watching live, hit the like button, please. And let's do some quick charting, you know, because that's what you need. Quick charting. Here they are. This is GME. We'll start on this time frame here. Lovely. 15 minutes. Looks like you're in various formations that could be at the low and then you go up to the high, and that would be great. Fantastic. Very, 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 very good. Most recently today, you can see nice positive area here, having recovered the center line of your RSI on a 50-minute time frame, and this is the last 15 minutes of the day. And to see price action doing that, broken this local level of support, and then opening here, doing so well, this 50 period moving average above you, if you just go straight through that in this 15 minute and go up to that 382.217 spot change at the end of the day, that would be beautiful, wouldn't it? Anyway, in the meantime, what have you done here? You've come down, you put an inverted head and shoulders, possibly put in this possible slower sloping channel, you've possibly broken out of it, and you're going up high again. It's a 50-minute time frame. None of those patterns have a real psychology at this level. It's mostly the things that people use to trade, self-fulfilling prophecies and whatnot, but they work. You've recovered the moving average, you've recovered the center line on RSI. That's real, and it means something about strength of trend. You've got a period of volatility coming in. When it ends, it'll open back up again and prices will go again, but it'll move, and they'll move from that area and likely come back. But where will that be when this period of volatility ends? And when the 15-minute time frame is the last 15 minutes of the day, what does that mean? Well, a little bit of fun for us all, hopefully, but we'll see. You know, maybe it's a poof, nothing happens. And then 1 hour, you're in that period of consolidation at the top. Might be bearish, I'm not sure yet. I'm suspicious of it when I look at it like that. Lower levels of support here are around $200. This thing makes me think that it would be a good idea to prepare for a retest of areas just under 200. Just off looking at it, it makes me think that, you know, there's huge amounts of divergence here on your RSI as the trend progresses upwards. It looks a little bit bearish when you put it in context. We'll have to see if it's a wedge and prices are going to continue through it. You could see higher lows and perhaps even higher highs within that, but we'll see how things evolve. could take it slightly differently and say perhaps it's something like this, and you know, price action may break down once it gets to the top, come back down to the lower level, the measured move from that, if it should happen, and GME does drop back down to test these levels, which I think would lead to a large period of volatility should it happen, especially if it happens anytime soon. If that break comes in around here, you just test, what, 60% of that move, probably takes you in around these levels, 204, maybe just below at 200, maybe even just below that, around 197. That would be the extent of that move. You'd then look at price action again and see what was going to happen, but if that did happen, it would be interesting. It'd be interesting, but we'll look at it as and when it happens. It's likely before that you go back up to the top of this formation because you're not really anywhere near that yet, and we'll see what happens because you have got other areas above you, and we'll look at them in a minute. That's the hourly time frame. On the 4 hour, you can see there's this perhaps an ascending triangle. You're in the center of it now, so you'd likely experience a little bit of flux. There's loads of different Fibonacci's on there, but I can tell you that this one over on the right's important. It's the larger Fibonacci retracement you're measuring against, with this being your low and this being your high. And the price action goes left to right, so this direction, then measuring it away, the retracement. I guess you can say, well, how far has this trend gone so far? If we captured the 236, that's important. It's above the 382. It's bumping off the lower side of the 0.5 at around 225.27. That's interesting because when it breaks there, it's only straight up there. You're looking at the golden pocket, and that's where it's likely goes to. And it could do that on a divergent move because when you're on the higher time frames, you can see you've come down here. You're only still resting above the bullish control zone. That means something. You are below its own moving average because you've been in it so long, and within it you've been going down. But there may be a reaction when it bounces around here. We'll see. Depends how the lower time frames finish. On the 1 hour, that same information shows you having accumulated above the center line, so that may be what happens here, an accumulation above this area before it breaks down out of the bullish control zone. On daily time frame, you can see you've got your strength of this positive trend is still really strong. Positive splay, positive slope, really good areas to see it at, and then really strong picture here on your RSI. That's fantastic, looks fucking brilliant. That's your GME TA. And then go on AMC, we'll say on this daily time frame here, it's not quite as apparent, but you can see it looks like perhaps it's a little bit ugly. Seems like it to me. Having knocked about bullish control zone and then dropped down. It's above its own moving average, and it's above the center line. That I like, and it's in a period of what you could say is higher lows on the RSI, and I also like, but I don't think it's sustainable necessarily. Drop down to the 4 hour time frame. I know we just looked at the indicators, not the price action, but as you can see, we'll do that in a minute. You've got your strength of this trend as represented by the DMI. It's like a bit of flux there. It's got a negative slope on your DI positive. You don't like to see that. You've got a head and shoulders here on your RSI. Your second to right shoulder of it's like very divergent from the head with a higher high on price action in terms of body closes and body closes. And you can also see that you're now below the bullish control zone. This is really ugly, so ugly, and that. Bleh. And then down the 1 hour, struggling to get above its own moving average. Debatable if it's above the center line or not. Really, it hasn't done anything significant, and you've got ascendancy now as the DI minus, and the negative trend seems to be taking over. In the early time frame, significant down to 15 minutes. Flux, failing. Not great at the lower side of the demand to see that sort of thing. So you want to see AMC put in some boosts in that, and it could easily do it because, you know, the nature of the market participants and the way that price action goes, you know. Can I have a quick word? Velocity! And you're looking up there and you're like, 886, 47, spot 25. That's likely where it goes if it does take a big thrust upwards in a short period of time. Thank you very much. That's price action for today. You got 8 minutes until the daily close, but I already told you everything. So that's the busy apes. That's what we want to see tomorrow, and it's all the price action. If you want to tune in and get that excitement from a close and all that, then you'll have to tune in for a live show. That's the end of the clip. Hit like button. Thanks very much. Make sure you comment and things like that. It really helps algorithm. Well, it helps me beat the algorithms or something, or work with them. I don't know. Am I looking at the wrong camera again? Definitely. Thanks. That's the end of that stream. Ain't it great? And now we can relax as price action fulfills our dreams and we reach our destiny. Lamau, bloodshot blinkers, you're way off. I joked that a stop loss in GME would be at minus 500. You can't go below zero, you fanny. Dink and Bloodshot are two lovely people. I hope you're getting on. That looks like a nice friendship blossoming there. Very good to see from the Doomslayers. Not cutting in each other any slack. And also a bit of bants. So hope everybody's being nice to each other. Dink, Bloodshoot owes you one. Bloodshoot owes you one from what I've read there. But maybe you already got you before and these are all friends anyway. Good one. So how's it going, everybody? We've had a good day today, haven't we? Yes, we have. It's another chapter in the greatest story ever told about the greatest show we've ever seen. I'm on the wrong fucking camera constantly, but you know. Ay, ay, ay. Well, it's not exactly GME. Well, if you aren't getting on, fucking get on, right? Get on, for God's sake. What the fuck? Get on with each other, eh? This is what I'm saying. Like, it's brilliant, this whole community. Not just this community, but the whole movement is GME. Because, like, previously, you know, me, myself, personally, maybe I would have crossed the road to avoid some people. And now I've realised there are my ways and how much of a fucking fanny I was. And now I get on with people that I might not have had cause to speak to otherwise. And these are my friends. And I'm your friend. Never leaving you alone, so you can't escape. It's too late. You can't escape. Too late. But we got it. I know you have. Cool. Mark knows. He's cool. Everyone knows. Anyway, what else is up? Stefan after Tradespotting. What are your favorite time frames and why? Well, I kind of like the Jurassic Age. That's my favorite one. Definitely it is. Yeah, definitely would be. Definitely would be, because it reminds me of what we're like. Hey, we'd be like the velociraptors, and that we'd just be like dangerous as fuck, eh? And like the rest of the world doesn't want us ganging up. Like they just don't want that, because that'd just be fucking everything. Eh? It would be their world then, wouldn't it? If all the velociraptors just were like, nah, fuck this shit, we're doomslayers, and that, and we know taking none of this tyranny, this tyrannosaurusness. We're fighting for ourselves. We are pride velociraptors. Wait, what am I doing? Go back to the charts. Hide down here. Don't say silly things. What was we talking about there? I can't remember. What are the charts doing? Just 5 minutes too. What else has been happening? Jamie, can you take a look at D's nuts? That was Harriet. Thanks. Can you take a look at D's nuts? I'll tell you what I will take a look at. If I pinned it in chat there, I've not pinned it. You want to see the t-shirts now that Harriet's designed? Check it out on Unreasonable.shop. I never advise people go there, right? And I certainly don't advise you buy things. But check it out. Check out those t-shirts and the new shop design and that Harriet's done. My goodness, I like it a lot. Hey, yo, clutch artist, how you doing? Fractal Fanny, McTrading. That's to be decided. McTrading? What are we to be deciding there, yo? Tradespotting favorite TA time intervals. Stefan, you've already had your question. Come on. Stefan, come on. You're going to have to tune in tomorrow for that one, Stefan. You would definitely cross the road if you saw me crossing your path, Tradespotting. No, I wouldn't. I'm not a cat. I'd pick you up, I'd tickle you, and throw you in a bush, and then I'd run away. And then probably see you later on and be like, hi, yo, and run away again. And then maybe see you a couple of weeks later and be like, yo, how's it going? That's that person I threw in that bush that time. And then we'd be great friends. That's what would happen. So I definitely wouldn't cross the road. In fact, actually not true. I didn't actually cross the road to avoid people. That's not true. In fact, I get a lot of trouble in life because, generally speaking, I cross the road to annoy people for no fucking reason. It's like a problem I've got. Like, it really is, eh? Like, I'll see some people being obnoxious and that on one side of the pavement, and you're like, well, you couldn't get past them if you're on that side of the pavement. And then I find myself on that side of the pavement walking into those people. It's like, what's wrong with me? Like, I was on the other side of the road. What's going on? You know? Now I'm likely to walk over and go, all right, lads, these are the sort of people that probably own some GME. This is your pavement now, guys. Boom. I wouldn't say pavement if I was in America, though, would I? No. Bloodshot Blinkers, Tradespotting. People are loving my Bing Bong shirt. Fucking right they are. I am. I love you too. PETV. Cool. Let's look at PETV. Did I do something wrong? PETV, Jamie. Pet TV. Here we are with Pet TV. 378. It's not been around for very long, has it? What the fuck? Hey, wait, hold on. So someone asked me for... You didn't. It only launched on the 11th of August. What? You're asking for real TA, are you? What's it going to do? It'll... It's funny how you had that, even on this, right, where I'd say, like, you can't really do TA, right? I'd say, like, you can't really do TA on these things, right? That's what I'd say. And here's Rocky's indicator with, like, the thing he did that makes it distinct. Doing it amazing, telling you at this point there was going to be a huge volatility, huge amount of volatility, prices were going to move, and then they're going to come back again, which would give you a huge move, which was here. And at that point in time, prices then went up 25% and then came back 25%. And does this indicator give you that? That's 50% increase in your wealth from that there. And then the volume came in after. The volume came in after. Holy fuck, this indicator is incredible, right? Look at that. Just look at that and tell me that that doesn't kick the shit out of anything you've ever seen before, right? And this is free, right? That kicks the living shit out of anything else you've ever seen before. Tell me it doesn't, right? Fuck off, eh? Look at that. Like, and it's just brand new, this thing. And this thing's just brand new. And look what it did. Gee. Rocky, you gotta put this only available to people on that go to the daily unpev, no data on lower time frames. Okay, will do, but still true to say that it gave you that. From that amount of information, it still gave you it, and it was legit there. That's even more testament to it. Daily. Huge gap. I see what you're talking about here. Then you come back up, what's going to happen? It's going to test that as it did. There's the top side of that gap. Probably scares people there bought in to try and chase the gap as it hits that level of resistance, which is also looking left important. Daily, there's your body close, body close. So drop it there, even though it's like halfway into that gap. And so you would have to bear that in mind. You've already come up and touched off it once. That might be the end of it. The top side of that gap's where, or around there somewhere. Somewhere like that. This level of resistance above here is where it'd likely go to, though. Is your 50 period moving average below it, but you're 200 above it. And you've had a negative cross in the daily time frame. It likely comes back and tests that def cross, while at the same time hitting one of these levels. Like if it breaks through this one, it'll go to that one. 4 to 7. That's a big fuck off move. RSI likely causes some sort of divergence. This will be some sort of Fibonacci level retracement here. Don't know if it'll get as far as the AGIX. I think this looks like it's got a little bit of retracement lower to go at some point. But then 382, yeah, coming around there. $25.38. That's not all that crazy. 618 up above there, like $6.39. I'd be super interested in this if it opened and closed a 4-hour candle above $8.91. Open and close a 4-hour above $8.91. I'd be super interested in this. Right now, I can't possibly see for the life of me what would ever take it beyond there. Like, not right now, I can't. No danger. Looks brutally. Psh. But yeah, there's a move on, a huge percentage move. It's just that you'd have to be managing your trade there and taking profit and that. And you also want to just follow that straight away with a stop that's tight and fuck it. You just like, because if it does it, it'll do it with a whack back. And at that point, it'll come back to where you're entering, because it'll come back to there. And then you'll have another entry. So you could have just done that. But like the percentage move, how many times are you going to play that? It's so tight. That's the one you're looking for. Entry on it. See, that's resistance there, and it comes back down. You see there, whether it's a question of whether you get another test of this low, or it comes as far as 315 entry, or potentially you don't get that, and at the lowest you see it back for is around 368 or something, but then it's at 368, 369, so maybe now is the time. But then this being the time and that being the picture in RSI, it's like, I don't fucking think so. And then it's just had this negative sort of action here, where that if that DI minus turns up, that's bad news. So I'm not a fan. Not a fan of trading that shit at the minute. Though if it did those other things, then maybe. Yeah, so the markets have closed. AMC closed 44.38. Nice. That's a good, nice move at the end of the day for that one. Put it down 1 minute time frame, see what that looks like when I stretch him out. Next one, nice recovery, nice move, touching that area there. Same likewise, right? Well, when you draw this on, that's your area you're trading within. Till such times as some new news happens, I'd put this Fibonacci on, say you're likely within this sort of formation. Get it to the wick like I advise other people doing it, instead of messing it up myself. Pardon me, that wasn't very good. And so you've already hit the 0.5. 0.618 and 0.5, that's you've done your full golden pocket retracement. At this point, you take the foot off the pedal and see if it comes back. You've also got all these moving averages likely to cross, which will bring in tests and whatnot. So yeah, I mean, that's not all that, I don't expect it to go up beyond that right now. If it does, it'll go straight up to this 886 at 44.70. That's where it's going, 44.70 if it gets above here, because you've already going to be broken your horizontal resistance in these big candles. And it wouldn't be out with the normality of this. It's just it looks like at this stage it would be due a retest for a number of reasons. One's like this negative formation it's in, and that's a wedge, and it's likely to break down. It just is, right? It's just likely to at least come to the 236. This is the way that shit works. So, and that's at 43.86. It's not much, but it's a percentage or two chunk away, right? Anyway, that's that. Good close on AMC, really, at the end of the day. Let's talk about it. There's no pun intended. That's not what I'm looking for. I'm looking for GME 213. Nice.